Happy Sunday, everyone. This is Dave's Daily Trades coming at you today with another video on AMC. So first, we had some actually pretty crazy moves these past couple of days. Nothing compared to what we're about to see, but just thought it would be very helpful to hop on here and just explain and cover what's been going on. So right now, I am looking at the 1 minute, 2-day chart of AMC. So of course, we did have on Thursday a pretty nice run. And I believe this run ended the day at just about 33% up on the day, which of course is pretty out of the ordinary. And definitely we're not seeing this in any other securities. So guys, this is really fun to watch. And definitely much more exciting than that sideways price action that we've seen the past several weeks. So of course we were trading right around $10. And made a move upwards to $14.33. I really have a strong level of resistance here at like $14.25, and that's what I've been watching. So we did touch it once, get rejected, again, get rejected, and a third time and got rejected. But this is actually really okay, and I was very much okay with this because, guys, we had a 33% move. And Friday, I know a lot of people were disappointed because we were so close to breaking that range. And then once we move past that, who knows where we're going to go? Upwards of $15, $16, $17 up there. That's where AMC hasn't traded in quite some time. So there really isn't a determined area of support and resistance once we get into that level. But Friday, we really just had a cool off. And really floated around $13 for the majority of the day after getting rejected at that $14.30 area. Totally fine, and I actually love to see this, especially after that 33% day. Seeing that we're actually comfortable trading around $13 is a huge confirmation on my point. Of course, looking down here at the MACD, we were really right around that zero range all day. Which just shows, again, that just confirms our level of confirmation trading in that price area. So let's hop out and take a look at what we're looking at for the daily chart. So we'll zoom into all of the relevant data here. Just give me a second here. So, as you can see, guys, we've had now 6 straight days of green candles. And a lot of people are saying this is a red candle, but actually, from the close on Thursday, we were still up. Very, very minuscule, but hey, you know what? I'll take it, especially in this range. So really my price predictions for the week to come is A, we might test again at that $12 range, which would be totally fine to see another retest of this before we kind of move back up. But of course, I wouldn't be surprised if we continue to test that $14.25 range and of course push beyond that. The real big key in all of this is making sure that the volume stays consistent over the next couple of days. So I did put a tweet out. This was on Friday at close, saying 500 million shares traded during the past 2 days. However, there's 417 million share float, which is over 80% is retail. Not to mention BlackRock, Vanguard, they also own 80 million. So something isn't adding up. And by the way, guys, if you're not following me on Twitter yet, definitely give me a follow at Dave Trades Daily. I would really appreciate that. And of course, I'm always tweeting about AMC and any other things that I'm finding throughout the day. So I would really appreciate that. Anyways, coming down here to MACD, we did have that crossover on Wednesday, which of course led to a really, really big day on Thursday. And of course, a small move up on Friday. One thing to mention here, guys, is the RSI is starting to flatten out. And that was just because Friday, really much did not happen. We really just consolidated for the majority of the day. But of course, we're still under that 70 region right here, which of course, once we go over 70, that's when it starts to look a little bearish because we are overbought. But one thing to kind of point out, if we look back here, when we had that first run up, guys, we were trading right at 70 when we were at $3. And of course, the spike and jump up to $20. Yeah, we came way over. And really, I'm just pointing this out because the $70 range doesn't mean that we're automatically going to start trading down. It's just typically an area of when we start to see some selling pressure because of the overbought area. But of course, we can continue this run, and as we did here for 5 days over 70. So definitely take that with a grain of salt. But like I did mention, guys, the volume was absolutely insane the past couple of days. And the entire float was traded in just 2 trading days. So, of course, that's nothing new for us. We've seen this before. But, you know, that's something really interesting that we really do not see anywhere else in the market. So, definitely keep an eye on volume. And if it holds steady, like I said, we can see some really significant moves for the next couple of days to come. All right, so another thing I did want to mention was, I'm sure you all have seen this Ortex tweet that came out. So pretty much what they're saying is there was a short squeeze trading signal. So of course, with Ortex, it's a lot of AI-based systems where they're understanding all the data that comes in and giving us some outputs of what we can expect in the overall market and with certain securities. So we'll just go through this real quick. A short squeeze signal was generated based on the recent price increase in the high shorting levels in AMC. The mean return for this signal is 44.53%. Ortex trading signals are based on historical performance and are not investment advice. So I saw a lot of people saying that, wow, the mean return for this type of signal is 44.53%. So that's not great, of course. And especially for what we're kind of thinking is going to happen because of this short squeeze. But, guys, we got to read this. The mean return. So what they're saying here is the average return of all of their kind of signals that come out are going to look like about 44.53%. But, guys, take this with a grain of salt. And the reason I say this is because AMC is like no other short squeeze that we've seen. You can't even really compare this to the Volkswagen squeeze back in 2008. So the most important thing is just to know that there was a signal that came out. This data right here, I would say it's almost irrelevant. And this is just based on historical performances and other short squeezes that have happened. So guys, you can absolutely ignore this number right here, but just know that Ortex, their data which they track, is symbolizing that there is a short squeeze that is going to happen in the near future. Of course, this could absolutely not happen with Ortex, but of course it is relevant because they do have a very good system from what we've seen in the past. So that is really everything on that end. So really, I've seen so many new AMC investors coming into the party now. And of course, a lot of people, it's not too late, guys. We're still trading at, $12.98, which is a good time for people to jump in. But for a lot of people, and especially since me, when I've been holding since early January, when this kind of all unraveled over here. So a lot of people are saying, oh, if I didn't get in at $5, it's too late. Or if I didn't get in at $9, it's too late. That's not true at all. So really, if you're a new AMC investor trying to get into the game, really look for support and resistance levels to jump in. So if we touch down at, let's say, $12.15, which I have as a pretty good area of support, the biggest thing that you want to look for is consolidation. So of course, over here, we had great consolidation at just about $9 for a few days. I always look for 3 confirmations on every line, and that will kind of confirm my areas of support and resistance. So yes, of course, $9 is a great range to jump in, but since we are here now, I would like to see us consolidate around this $12 range, and I would say that is a great area to buy in at. And if we don't consolidate here and we continue the run up, look for consolidation around 1440, 1450, around that range. And if we can hold that for 2-3 days, I would say absolutely jump in, because like a lot of us have been saying for some time, guys, the price is more psychological at this point. Don't let $1, $2, even $3 or $4 scare you. Of course, this stock has just been so volatile that, yeah, sure, we can see some significant drops, which I really don't think will happen. But guys, it's really just a leap of faith that you have to take. Go on Reddit, go on, Discord, go on all the social media platforms and really look into the data. And if you're convinced about a short squeeze, or if you're just looking this as a reopening of the economy play, then guys, absolutely jump in. I do have to say, though, I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt and do your own investment advice. But I like the stock, and that's why I'm here recording this video. So I hope that that provides some good information for all you new investors and all of you apes that have been here pretty much since day one. I hope you continue to hold the line with me. So with that said, guys, I hope you all have a great rest of the weekend and tune in for the next one.